And we're live. Welcome to Currency Live, hosted by me, Chris Harmse, co-founder and chief business officer at BVNK. At BVNK, we believe the next generation of financial services will be built on stablecoins. Currency Live is a show all about the people and the projects at the heart of that shift. Today, I'm joined by an extra special guest, Rene Michau, Global Head of Digital Assets at Standard Chartered Bank. Rene leads the development of digital asset solutions at the bank across trading, broking, and custody. He's tasked with making sure Standard Chartered clients get access to safe digital asset solutions. If you've been living under a rock and don't know who Standard Chartered is, Standard Chartered operates across 50 markets across Africa, the Middle East, and Asia, and really focuses on connecting developed economies with emerging markets. It also has a storied history of innovating across the digital asset space. Back in 2020, Standard Chartered founded Zodia, which today now offers a custody product as well as crypto trading and brokerage services. And in 2023, launched a tokenization platform in Singapore called Libera. And this year, Standard Chartered has launched an EU digital asset custody unit in Luxembourg, and also recently announced its intention with a few partners to issue a Hong Kong dollar pegged stablecoin. So we have lots to talk about. Welcome to the show, Rene.
Hey, Chris. Really great to be here. Well done on the intro on who we are. And yeah, looking forward to the chat today.
Awesome. And I think it's a perfect time to be having this conversation as Bitcoin breaks new all-time highs, ETH's above 3K, and it feels like, crypto is back. So
I'm wearing my bull market t-shirt today. So we're all good to go.
Awesome stuff. Yeah, it does kind of feel like stablecoins and, all the rage in crypto at the moment, but it's lovely to see that the OG Bitcoin is back up there.
Exactly.
So, yeah, what's customary as we kick off, these each time we do them is a quick fire round, just to make sure you're awake and listening. The rules are pretty simple. You can say yes or no, or give just a one-word answer. I will also allow a single sentence answer if you really, really have to. Cool. You ready? Let's get stuck in.
I'll do my best.
Nice. First question. Are banks ready to use large-scale public blockchains?
I think it depends on the bank.
Great. Are large-scale public blockchains ready for banks?
Again, I think that depends on the blockchain.
Can you truly understand digital assets without owning some crypto personally?
I think it's difficult. I think personal ownership is very motivational to deepening your understanding.
Agreed. Stablecoins, risk or opportunity for banks?
Both.
Nice. Should every bank be issuing their own stablecoin?
Again, it depends. I think there are certain market conditions which make it sensible for regulated banks to issue stablecoins. But I do think it's very likely that many banks will over time.
Great, very diplomatic answers. I love the depends. True or false? Banking executives understand blockchains better than they understand TikTok.
Yeah, I'm going to say in my experience, true.
Is the East ahead of the West on digital asset innovation?
No.
Interesting. Awesome. Thanks for that. So just to kick off, Rene, can you tell us a little bit about how you came to work at this, intersection of banking and digital assets? You've obviously been in the banking space for quite some time, but have a unique seat at, at one of the largest banks in the world, leading their digital asset business. So yeah, I'd love to hear you talk a bit about how you got into the space and how you ended up in the role that you're in.
Of course. So Chris, it's pretty simple. I found lots of stuff that I wasn't good at, and so I ended up in this chair. I guess I've had the opportunity to work across different parts of banking over my career. I've worked on the trading floor. I built a carbon trading desk for a bank in Australia. I've worked in transaction banking and innovated in payments. I've had the opportunity to work with clients and client coverage. I've even worked in technology and in risk. So, I think that that's kind of been helpful, because if we look at what digital assets is doing for financial services, it's kind of asking us to rethink why we do things in a certain way, how our business model operates, whether or not our business model as banks is the right business model for the future of finance. And I think this whole construct where, for so long now, we've all gotten comfortable with doing commerce on the internet. And from a money infrastructure perspective, we haven't done a great job of delivering money into the internet infrastructure. And so I think that the ability to do that is upon us now with the maturation of the crypto markets, etc. And I guess my experience has allowed me to be able to look at, well, how does trading work? How does custody work? How does payments work, both in the traditional world, but also on this new technology stack? And I guess throughout my career, I've had to learn lots of things over and over again. But it's really interesting to me, particularly as we're going to be talking about the stablecoins today. Historically, I've managed check product for a financial institution. I managed agency clearing for checks for ANZ in Australia several years ago, quite a few years ago now, and we managed to grow the market share from 14 to 28%. And then I look at what we're doing for stable coins and the note issuing business that Standard Chartered has in Hong Kong. And there's some real similarities between these very traditional bearer instruments and these fundamental primitives of traditional banking and what we're seeing in digital assets. And so I think that experience across that sort of breadth of an institution, and specifically finding out that I'm not good at most of it, has put me in a good stead for the seat that I'm in at the moment.
No, 100%. I think those diverse backgrounds definitely hold you in good stead to kind of understand blockchain and the applications of blockchain to the old financial market primitives, for sure. I mean, so like a follow-on question there, I've seen you talk passionately on certain panels about blockchain technology, and if you had to kind of segment the market today, just like what is the most exciting part of digital assets for you? You're obviously touching a bunch of different things at the bank and thinking of outside of just a bank as well. What would you say is like one of the most exciting things for you at the moment in the digital asset space?
Look, for me, autonomous financial products have always been fascinating. So even something as simple as a bilateral escrow that we established through smart contracts on a public blockchain, whether that's denominated in stablecoin or whether that's in a layer one token, that ability to take these mechanics of how we exchange trust and value between individuals is always been fascinating to me. And I think that the more I see those things maturing and find ways for those things to become more and more relevant to traditional financial services, I guess the more excited I get. So I think that this idea of trying to get layer ones right, and whether that's Ethereum or Bitcoin or Solana or whatever layer one is going to starts to solve the right problems, and the transferal of traditional banking services onto these infrastructures, I really think at the core of it is, can we develop low cost, easily executable autonomous financial products? Because I think that really helps us scale things both up and down in ways that have never been possible before. A really short example of this is when I went to do my first home loan, I was working on the trading floor. The idea of having an interest rate cap and an interest rate floor or a collar around an interest rate product was a fairly simple concept as far as I was concerned. When I went to my personal banker and asked her for a cap and collar, for a collar on my mortgage interest rate, she looked at me like I was from Mars and there was no possible way that would work. And so I went to try and figure out, well, why was that? Like, why was it so complicated to do on a mortgage? And what I realized was the admin cost in operations and back office functions to manage a cap and floor over a mortgage product was far too expensive for the value of that product. And so the idea that we could potentially build that in such a way that was fully automated and executed over smart contract infrastructure is kind of what keeps me going to say, okay, can we do something as simple as that, which should be a relatively commonly available product? How do we do that in a much less complicated way?
No, 100%. And I think the programmability of some of these, financial products or just crypto more broadly is actually spoken less about these days, but it really does, for back office efficiency and kind of just getting more interesting products to market quicker that are or don't have the back office burden that some of the products have today is a really interesting part of crypto. Yeah. So diving into the first topic of the day, it's really like, we're going to chat a bit about the role of banks in the digital asset ecosystem. Over the last 5 years or so, we've moved from this paradigm of banks versus crypto, or even crypto as disintermediating banks, to the two things almost merging, where we now have banks investing in launching, partnering with digital asset institutions or launching their own crypto products. And then on the other side, we've seen crypto native fintech wanting to lean more into banking services, launching virtual account products and that sort of thing. So it's been an interesting kind of coming together of the two sides that were quite adversarial a few years ago. And I mean, I think Standard Chartered in particular has had a lot of digital asset projects on the go. So I'd love to hear how you guys have thought through digital assets over the last 5 years. How do you guys bucket your digital asset strategy? Where you and the bank focusing, over the coming, 12 to 18 months in the space?
Yeah, thanks, Chris. I think that I don't know that it's quite as homogenous as that. I think there's still parts of the ecosystem which are adversarial. I think that there's a lot of nuance and challenge in this. So let's maybe step back and look at how we try and look at it from a Standard Chartered perspective. It's one of the crypto and digital assets is one of the topics where it's very easy to get religious, right? And be, on the Bitcoin maxi side of the fence, where Bitcoin is the solution to all of the world's problems, and all you need to do is buy Bitcoin and everything will be fine. Yes, that's an overcharacterization, but it's for illustrative purposes. And then on the other side, you've got, the naysayers, which are like, this is all, still with a view that this is all for Silk Road and drugs and guns on the internet kind of thing, right?
Yeah.
And I think, we try and take the middle view of this, which is this is a new class of assets and technologies that is going to impact the way that we do financial services. And the best way for us to understand that is to lean into it. So I spend a lot of time saying, you can't ride a bike by looking at it. And so, in some ways, we're learning to ride that bike by stepping into very specific parts of the ecosystem. And so, we know that digital assets are here to stay. We know that they're going to become an increasingly important part of financial services infrastructure. And in order to be able to meet our client needs, we need to become skilled at working with large-scale public blockchains, to some extent permission blockchains as well. And we need to develop that ability to understand the risks, manage the risks, build product, do all of those sorts of things. So, even looking from the outside, you'll see that pretty much all of what we're doing is both client-driven and commercially motivated. Some stuff is more strategic looking than others. Some of it is dealing with a very specific client need, like we'd like to custody our Bitcoins with a bank, please, and building that crypto custody infrastructure to be able to do that. And some of that is, well, what is the cross-border payments landscape going to look like? So we've got a couple of things that look at that. One is our investment in Partior. The other is our investment in the stablecoin venture in Hong Kong. And we know that these things are going to be offering slightly different ways to solve similar problems. So I guess the strategy for us is to really focus on where our clients want us to be, develop that risk infrastructure and that tooling to be able to understand how to do that safely within the scope of our license. But we also believe that it's really important for regulators to be leaning on commercial banks as essentially an extension of the regulator, which we've become over the last several decades, to ensure that there is a stable bridge between what is an emerging economy and an emerging space that consumers, corporates, and the parts of the global economy are seriously adopting. And having a commercial bank as that bridge helps with managing stability risk. It helps protecting consumers. There's a heap of stuff that we already have a role at doing. And we would strongly encourage prudential regulators, central banks, to ensure that they are leaning on their large balance sheet commercial banks to be encouraging, this connectivity in a sensible and well-managed way. And that's very much at the heart of what we do. The last thing I guess I'll say on that is, like, if you look at who we are, you mentioned that at the top of the call, we connect emerging markets in the global economy. And if you look at this emerging market of digital assets, or if you like, internet money, we think that has very similar characteristics. There is some currency volatility. There is dynamic regulation. there's a whole bunch of things which are, very similar and very familiar for us at Standard Chartered. So we certainly think we've got a right to play, and we are working very hard to ensure that we're building the right capabilities for our clients, along with all of the infrastructure to support that.
No, and I think you you hit the nail on the head there on the emerging market front, and I think there are similarities to emerging markets to this new emerging digital economy, as you mentioned. But I think you guys also have a unique view in that many of the use cases for stablecoins are actually being adopted in the global south or in the emerging markets, whether it's access to dollars or, so I think, knowing how to operate in those markets, but also the underlying consumer and customer base that you generally are able to serve, given your position, is quite important to bring some new products to markets in the emerging markets themselves.
Yeah, agreed.
Also, I also wanted to, it feels like there's an announcement every couple of weeks coming out now from every different bank, whether it's JP Morgan, doing the deposit token and banks getting involved. Sometimes it seems like a lot of them are just announcements and PR, but what are kind of, to you, some of the vanity projects that banks are doing versus what are actually the commercially valuable or viable projects that you see either yourself or other banks kind of leaning into versus just like PR press release type stuff?
Look, I'm going to be kind to my peer banks, because I think it is very difficult to know what to focus on. The the idea of being able to deliver financial products which rely on large-scale public networks, open source infrastructure, open source developer communities is exceptionally scary, right? I've been around long enough to know have been around when banks first started adopting Linux as an operating system for the data center, right? And that was, that in itself was a big leap of faith for many firms. I do think that there are some similarities with that, where the idea of trusting these large-scale infrastructures is hard. We also see central banks spending quite a lot of time, and including the BIS, focused on RTGS, and the challenging thing, and how reliable that is. And I think that's true to an extent, but I think you can track that the ecosystems within crypto, including the Ethereum blockchain, the Bitcoin blockchain, are outperforming traditional payment rails in terms of uptime and overall reliability. This is a very difficult conversation to have, and I think that more research needs to go into that. Also, there's not a huge amount of transparency on the reliability of RTGS systems, so it is very difficult for public researchers to be able to to delve into that. So back to that view on, from commercial banks, what's a vanity project and what's not.
Yeah.
Each bank's got a risk appetite. They've got a set of things that they can focus on. What's interesting is we've focused on permission chains for a long time now, right? Since 2013 or 2014, I think the Corda white paper came out. We've had 7 or 8 fairly sizable trade finance consortia, which only one of which still exists, and none of which are still active. We've had all of these things. So I think lots of bankers are like, they know that they need to do something in this space, but figuring out what that something is hard. They don't want to become, no bank wants to become irrelevant to their clients by not engaging with the digital asset space. But I do think it's pretty complicated to move a large financial institution to enthusiastically engage with, public chain crypto assets, particularly at scale. There's also regulatory concerns around that, right? So currently, the Basel Committee on Banking Stability is discouraging banks from developing any significant balance sheet position in crypto assets, which is again making banks take a second thought around what they focus on. So JP Morgan is a good example. They've put a heap of effort and investment into their Connexus platform, and developed a capability there. And many of the other firms have done similar things. GSDAP from Goldman's and Orion from HSBC. And so I think you'll see each bank is just prioritizing things differently. My concern is if we're not engaging with the difficult stuff now, we're just kicking the can down the road. And so what we are seeing is that our clients and consumers and corporates are engaging strongly with stablecoins, or starting to engage more strongly with stablecoins.
Yeah.
We can see a path where potentially significant economic activity moves into public chain infrastructure. And that's either going to be facilitated by regulated banks who have developed the tools to do that, or it's going to move outside of the traditional financial system. And I think that's, I think all of this creates a lot of fear and confusion. So I think pretty much every bank believes what they're focused on is the right thing for them. And I think it's hard to determine, which what's going to be successful. Our view is, though, that we've got a crypto asset market which is over $3 trillion in market cap. We now have 250 billion plus of stablecoins. Our house view is that both of those things are going to grow significantly over the next 4 or 5 years. And on the other side, we've got clients who are asking us for access to this infrastructure. We think we have a responsibility to provide that within the scope of our license and permissions.
Yeah. Well, I think, I mean, 100%. And I think what's important there is the clients coming to you, and maybe that's like switching gears. I want to chat a little bit about, get deep into kind of some of the stablecoin use cases, but also what your clients are asking of you. Because, earlier you mentioned you've very much been client-led in your digital asset strategy. And, and a big part of that is to really providing clients with safe access to digital asset solutions. So talk to me a little bit about, like, 5 years ago, what were were they just asking for Bitcoin custody? And as you said today, that's moved on to, hey, I actually want to access some of these stablecoins. How do I do payments with stablecoins? How's that evolution shifted from what clients were asking 5 years ago, and then what you launched on the back of that client demand, and then kind of what they're talking to you about now, and what you guys are potentially looking at launching going forward?
Look, the good news is, particularly on the institutional front, clients are very consistent. 5 years ago, most of what we were being asked for is access to Bitcoin and Ethereum, both from a trading perspective and from a custody perspective. We've been working on the trading solution within the FX business for some time now, and hopefully that'll come to market soon. But we've had custody in market since the end of last year, and we've seen very aggressive growth and continued demand for that. I think it's true that many firms are still, looking at how they allocate a portion of their treasury to these asymmetric assets, to Bitcoin and Ethereum in particular. We are seeing a little bit of demand for, altcoins through our Zodia Markets business and, our Zodia Custody subsidiary. And I think that's sustained. Like, during the bear market, we saw a little bit of softening of that. People weren't as aggressive, and people who had just started on the journey might have slowed down a little bit, but there was still pretty concerted interest. And, actually in that bear market is when we saw the launch of the crypto ETFs, right? I think I think we've had over 1.2 billion inflow in the last 24 hours into the crypto ETFs. So they show no signs of abating. And that represents that continued demand, not just in the institutional sector, but also from retail investors wanting, an access path. And whether that's via, listed companies like Coinbase and Circle, or whether that's by, direct access through an ETF, we're still seeing that, very consistent growth in retail demand. Likewise, from a wealth perspective, we're seeing that as well. The thing that has changed, and I said, and fortunately with Zodia Markets and with our, broad corporate investment bank, we start to see very much how that's unfolding. So let's look at some different client sectors. So on the corporate side, there's the ability to move funds transparently over the weekend or outside banking hours is becoming more and more of an opportunity for clients. Whether that's dealing with the ability to settle time-critical payments on a Sunday, whether that's to do with logistics and releasing goods and vehicles from various locations by making sure that a payment arrives on a Sunday or a Saturday, or whether that's being able to do real-time FX or real-time treasury movements and move money from one location to another outside of banking hours. And you run into some really weird periods in the calendar where Hong Kong's got a 5-day weekend, the US has got a public holiday, and so potentially you end up with 7 or 8 days where not all of the global system is actually connected properly. And so, lots and lots of corporates are talking to us about this. There's also a really interesting conversation around trapped cash, so markets with restricted currencies, how is, what's the way that, is there a way that we could leverage stable coins around that? And that's obviously that's a work in progress. But we're also then seeing real interest from the e-commerce sector. So a lot of payment companies, are interested in the stablecoin we're about to issue in Hong Kong. Lots and lots of firms wanting to add that as a payment method to their checkout. And so I think, and in fact, I think you mentioned some of this as well on another podcast recently. This kind of how do we see e-commerce evolving when you've got merchants who can both earn and spend stablecoin within a platform? I think that gets pretty exciting, and that speaks to acquisitions some of our clients have made. It speaks to partnerships to issue stablecoins, and it speaks to the inbound queries that we've had for our stablecoin. So that is what I would say is the main demand. And you might say, well, it's just a few companies, or it's just this, or it's just that. I would say, the number of, just very anecdotally, the number of meetings I'm being invited to from a corporate client perspective in the last 12 months on stablecoins in particular is probably gone up 3 or 4 times. So this is clearly a discussion amongst treasurers and CFOs around what this might mean for them.
Yeah. No, I mean, we're seeing the exact same thing across our business. We obviously help enterprise merchants as well as PSPs get access to stablecoin payments infrastructure. And it's across, whether it's sending a payment or doing a payout, for like an e-com marketplace or just a marketplace in general, or doing some gig economy payout, or this merchant acceptance use case, which I think is starting to get some traction. As you say, we have long always seen payouts start to drive a little bit of acceptance, but it was always quite niche on the acceptance side. Certain verticals had adopted, but I definitely see it moving into e-com. Shopify doing some moves there has probably accelerated some of that over the last couple of weeks. So we also see whether it's just our pipeline is overwhelmingly 3x, 4x, and a lot of that is payment companies looking at different use cases, starting to think about acceptance. But then to your point, even companies like Standard Chartered, who have a big acquiring business, and their underlying acquiring business starting to think, look, should we add this to our checkout? I know our teams are having a conversation about that as well for some of the large merchants that you guys serve. So it's an exciting time and an exciting use case, because it really does open up this global, always on way to pay, which I think is needed, quite sorely needed. And as you say, those things can move 24/7 over the weekend when banks are closed, and settlement can almost be real time after processing a payment.
If I could just link the two last topics quickly. Yep. I think one of the reasons why a lot of the early forays into digital assets by commercial banks were not successful is because we didn't deal with the idea of having cash as part of the network. So the idea of, if you look at the trade finance consortia, like a lot of the trade documents would move over a blockchain, but then the payment would still move over the traditional rails. And so it kind of, we were sort of missing out on a good portion of the benefit or the upside because we didn't have cash in the network. So I think the idea of, this idea of having stable coins, being the killer use case, which is, what our report said at the end of last year, is very much that it unlocks all of these other use cases that we've all been trying to bring into existence. And so, even those little things like weekend payments, merchant acceptance, once you've got, wallet infrastructure and coin infrastructure, embedded in that sort of commercial flow, then the idea of doing a trade financing deal or some other product on top of that becomes much more accessible to much more of the market, and therefore commercially viable.
No, 100%, couldn't agree more. Well, look, it's been great chatting. I always have a closing off question, so I'm gonna hit you with one. So if you had unlimited resources and regulatory clarity, so regs weren't an issue, you don't have to worry about losing your banking license, what would be the most transformative digital asset product or service a bank could build, in your view?
I still think it's custody. So, if we think about the world today, everyone's money and assets exists as entries into centralized databases managed by banking institutions, and we move stuff around by sending each other messages and then adjusting those databases.
Balances.
And the reality is, like, whilst we have lots of security around that, each bank has the admin username and password to the database and could theoretically change it however they wanted, right?
Yeah.
Going forward, the paradigm's different. You have this shared ledger, and the only way to make changes to that, no one has the admin username and password. The only way to make changes is through a public-private key pair. So managing that effectively, wrapping that up in a proper service proposition and simplifying that for clients, I think is the most important thing to be doing.
Yeah, simple yet very, very, very important for the global financial services. Rene, it's been great chatting with you. Thank you so much for joining us.
My pleasure, Chris. Always good to see you.
Likewise. And thanks to everyone else for listening in. This is Currency Live, hosted by me, Chris Harmse, brought to you by BVNK. We're building financial infrastructure powered by stablecoins. We'll see you next time. We'll be talking to co-founder, chair, and CEO of Lead Bank, Jackie Reese, about banking the crypto industry and the incoming stablecoin regulation in the US. See you next time. Thanks so much for listening.
See you guys.
Ciao.